Good weekend, all. Ira Epstein with your weekend update for your financial markets for this Sunday, the 13th of February, 2022, about 3:15 in the afternoon. That's p.m. Central Time. Certainly before Super Bowl day. So far, what do we have? Well, over the weekend, I waited. I wanted to see if anything happened in the Ukraine. So far, there's been a lot of people talking. The U.S. says that intelligence reports have Wednesday as a day that the Russians have chosen to invade. That can obviously change, but they've picked up that intelligence. That would be before the end of the Olympic Games, so I don't know if that's going to happen or not. We'll see what that does. There's a lot of diplomacy going on. Everybody's trying to stop this thing, but from the looks of it, not going forward that well. You've got about 30 warships right off the coast of the Ukraine now, doing their naval exercises. More troops have been moved into Belarus and the other parts of the borders. And so far, Russia feels that they have not been treated right and that those are there to protect themselves, those troops. Okay, you can believe all that all you want. But what happened on Friday, you can't get away from. As the day wore on Friday, in the afternoon especially, the market started, somebody leaked something. That's what I believe. And all of a sudden, the bond and note market took off, and they just kept galloping. The gold market completely turned around, got itself higher on the day. The stock indices, which had been trying to stabilize, started to let go to the downside. The dollar firmed up, the Swiss franc, and the yen. All the things you'd expect on an event where there's an invasion. And that's what the market did. Grain market took off big time because you don't know what it's going to do to the wheat market, especially with all the wheat that comes out of Ukraine and Russia. So there's a lot going on. And of course, what do you think crude oil did? Right through the roof. Markets looking at the potential there for another issue. So the war issues there, you don't dare fight it. The market tipped its hand to you what it would do on the invasion. You know, this could be buy the rumor, sell the facts when the actual fighting, if it ever, the invasion happens, what goes on. It's not expected to be a long ground war, but it certainly should end up with Ukraine losing whatever Russia wants to grab. That's how it's going to be. That doesn't mean the Ukrainian army won't fight valiantly. That's not what I'm saying. Overwhelming odds, any way you want to do it, and no help from NATO. If NATO would step in, that'd be a whole different game. So, you can see the stock market down, so you just extended the loss for the week, well, actually for the month. Let me get this straight. For the month, you're down 2% so far. So the market has sold off from roughly the 47.58.50 level all the way back to 44.09. And if you add up where the break has come in from that high, here's a break for the month where you're down 5.34%, and you're adding, that was the month before, now you're adding another 2% to the break. When you look at the weekly charts, you can see how the market's nosediving and challenging those lows again. We also have inflation that you have to worry about, right? Now, Goldman Sachs is calling for 7 rate hikes. They've lowered over the weekend their guesses as to where the market will be at year end, but that's going to change all the time. I mean, you're in February and you're trying to guess where the market's going to be 10 months from now. How do you do that? There's too many moving targets. It's nice to talk it. People want to know what you think, but at best, it's an educated guess. At worst, it's folly. Okay. So as I look at the chart here, you can see how the market's all of a sudden, it did its darn best. This is how the market bottomed. This is here. Now all of a sudden you've got an inside week, and that's ugly. Now if you start down from here, because you have the swing line down, do you challenge these lows? To tell us that the market's really, this event's behind the market temporarily, you'd have to take out last week's high of 45.86. That would be the number that's got to be taken out to break that. If the market heads down, 42.1275 could be a target. On moving averages, all you did is rally back up to the 18-day average of closes. For those of you that watch me on my daily review, I showed you the Fibonacci counts, the 50%, 62% levels, and that's what you did, and you've broken away from them. For whatever reason, that's how they worked out. Now, First support on Bollinger Bands, 43.65, let's call it, right in that general zone. If that gives ground, 42.12.75 in momentum, you're not in oversold territory. You're just pushing momentum to the downside. When you come to the Dow, it's the same. So you take this whole break. We had talked about the size of the break and that maybe it'll get itself a rally. Well, it did, right back to what I call that line in the sand. So often you will see a market either well above or below that 18-day average, and inevitably when you get a hard break or rally from that low, depending which way you were going, or from that high, it seems to go back to that 18-day average to want to fight its battle. That's exactly what you have going on right now. So the next support level, when we reopen tonight, if they want to keep going with the thinking that they had, and from the press that I saw this morning, I got up, watched every news show, one after the other. There's nothing promising here, nothing at all. President Biden got nowhere with President Putin. We're going to put these sanctions on you, but you got to remember, Europe doesn't want the sanctions to be the worst thing in the world for Russia. They want that oil, that natural gas to keep flowing to them. They also want to be paid the debt that they've extended to Russia on a number of business ventures, so they can't use the SWIFT system. So as much as President Biden said, we'll cut them off, and all his aides said that, Europe is saying, no, you won't. You're going to leave that part open to us because we can't take that economic hit. That's what you're getting. So we've got this market with a higher high, lower low, really caught in between the Bollinger Bands. And you can almost say the same thing in the NASDAQ. It wasn't even strong enough to get up to the 18-day average. And it's, again, trying to find its support at the lower band. But this is a war environment. If you're trying to make sense out of things, give up on that. You're going to be living each day, how is this thing going? Does it look like diplomacy is going to have a shot at it? Or does it look like Biden's going to take, not Biden, but Putin's going to take what he wants? That's going to be the big issue here. When you take a look at the Russell, higher high, lower low, will we come down, the question in my mind, and re-challenge the 100-day in the lower band? Getting through those numbers is not easy. I hope you appreciate that. And it's not our war. It is Ukraine's war. We get involved via NATO, and I think the one thing that you're really seeing between Presidents Putin and Biden is they want to make sure that the U.S. and Russia aren't fighting each other. Two big nuclear powers. The last thing you need, something going crazy here, and we set that whole thing off. Nobody talks about it, but you do know France is a nuclear power right there, too. In the 30-year bonds, coming down right through here to the lower numbers. Obviously, the market got a bid. People, when they're scared, they buy U.S. Treasuries to park money. That happened Friday afternoon. And what it did is it lifted the markets back on this gorilla glue trade. Why do I call it that? Every single week, you're just hitting. This is a weekly chart. Every week for 2 months, you're riding that number and hitting that lower Bollinger Band and really not getting away from it. It's still a very bearish market. While it's getting a bid because of the war potential, it's behind the scenes of that. It's got terrible fundamentals to stay up if that occurs. Let's assume the invasion happens. Afterwards, you're still going to go back to everybody raising rates. When you look at the dollar index, look at what it held. It fell right into the 200-day average, the 18, moving back up here. Are we trending? Not on a weekly chart. You have a higher high and a lower low, but you certainly are seeing your area of support come into the market. The flip-flop's true of the euro. It went up and challenged. It just missed the 200 week average of closes, fell right back under the 18, and again, a higher high, lower low in this scenario. Canadian dollar. Well, the good news is in Canada, the bridges are open. The traffic is flowing. It went down from 250 people last Thursday, Friday that were on those bridges, protesters, to about 100 yesterday, about 40 today. The police have made arrests. They've moved the cars. Traffic is going, and I think we're all breathing a sigh of relief. Let the trade go. There's $360 million a day of goods that move between the countries off those bridges. That's a big amount. You've shut down the U.S. auto factories, or at least delayed and put them onto a cutback on shifts because of all this. In the Japanese yen, you got down to the lower band, and for whatever reason, magic happens, and the market found its support against it. Resistance is back at 87.65, and obviously this, the Swiss franc, and the dollar are all going to be watching the events of the week. Bitcoin has not turned the corner. It did lose the opportunity for the embedded reading. Now let's take a look on a weekly basis. Both numbers are under 20. Both were not under 20. So you've just been oversold, not losing, not getting an embedded reading. You're trying to correct a little bit, but there's a lot of resistance at 50,700. Now, I say that's so easy. You were down here into the 33,000 level, right? So getting up there, still a 50% bounce. I mean, these are big numbers. Have we seen the worst in Bitcoin? You can't say that on this chart. You can say you got to bounce. At any point, it can let go again. That's not a bullish chart. The differential between WTI and crude oil, well, you would expect Brent would get a bid on it, and it's starting because of the geopolitical climate that we have. The Brent riding the upper band, looks like it's going to embed again on a weekly basis. Not here, but week one, right there. Week two is this week, and if you get an invasion, it's not going down, so that would be your third week. I thought this market was going to fail, and it didn't in this market. You went back up over 9,100, and that was the end of the game, and it just kept going at the end of the day off that. Same in gasoline. It's too difficult to be short any of those markets as you're sitting there and you're trying to fight with them, trying to guess, gee, is there the invasion? No invasion. You're pulled on one side of all these markets from the interest rate and the inflation hikes, and the other by that. You're looking at our newest mobile phone app. We've revised it again. So this one does the spiders, the ETFs, the individual stocks that you'd want. All the news is here. The quotes, you can either look at them in this vision, or we have another vision that you can look at them in. You get to see the charts, how everything looks. You can put all the studies on them. I think you'll find it fascinating to work with that. My research, if you get my videos, they all play in here. You just hit them, they'll play right for you. Different way to look at news. We got all the government reports that come out with their graphs and so on, and our written updates throughout the day. Our audio reports, they're all here. And of course, at any point in time, as you're driving down the road, you can talk to this and just say, hey, play my quote file. It'll do it. Bingo. Just like that. So you're not sitting there distracted looking at a screen. You don't need to do that. It works off voice command, just like Alexa and some of the other services. How do you get it? It's simple. It's free. That's the first thing from us. All you need to do is to get this for you, go to our website under free offers, take a look at it, give it a try. You will need from us a user ID and password, so when you sign up for it, we will send you that. That way it'll operate for you, and away you go. It'll work, by the way, on Apple, Android, just about anything you can imagine. I think you'll like what you see. A lot of effort. This is a 2-year update that it took us. We got that done, and we think we've got the best product out there. I'm Ira Epstein. You have a good day. It's going to be a wild trade this week. Take care.